to FountainFX on Friday the 18th of July 2014. We are looking at the Euro US dollar on the 4-hour chart. This week we've seen quite a bit of news come out on the US dollar, and we've also seen the euro fall quite rapidly against the US dollar from the 136.20, 136.30 up here, all the way down to the 135.20, 135.30 area down here. So a nice 110 point move, so ample space to make some profit on that trade. However, it's always great to see price in hindsight. What could you have done in order to have been able to be on the right side of this particular trade? So what I've done is I've plotted some trend lines here on the highs, from the highs to the highs at the top here, and the lows to the lows at the bottom, and you can see it forms a triangle pattern. We then get the breakout of the triangle, so that then gives confirmation of the direction in which price wants to move at. The other thing to be aware of is that obviously this was a previous high here at the 136.50. We then got another high at the 136, just below the 136.40. Then it came down and formed another high here at the 136.30. So we can see that the highs are getting lower. So when we then got a breakout of this trend line, the breakout of the triangle, it shows that the consolidation, that price was then wanting to go in that direction, as confirmed by the lower highs. Okay, so a simple entry on the close of this candlestick would have triggered a sell order at the 136.05, which is where this doji then formed. We could have waited and possibly then got a better entry up here at the 136.20 at the top of this candlestick. But if we just keep it simple, so a sell at the 136.05, price then continued to fall. We could have plotted it with a trend line running along here. Break of the trend line would have happened down here at the 135.30 area, 135.35. So we're looking at a nice 70 point trade and nice profit from there, 70 points of profit over a period of a day or two. So that's a quick summary on that. What's actually happening at the moment is price is consolidating yet again. We've placed some trend lines from the lows to the lows to the lows and the highs to the highs. We're now sitting here waiting to see what's going to happen. It does look at the moment that this is very much a strong downtrend, but we have to look at what options there are. So it could continue to consolidate sideways. It could just keep going sideways, in which case these trend lines will be violated. They won't really show any direction upwards or downwards. So therefore, no trade in that sense. The alternative is that price then breaks above this higher trend line, in which case what do we want to do? What do we expect from it? Well, if it breaks above here, we're looking at a target up here at the 135.90, which is a ceiling where price has previously had it as a floor, so it's previously support, so we would anticipate that it will become resistance at this level, so we can use this as a target. So if we were to buy in with the break at this somewhere around about the 135.40, we could then take a nice 50 point trade profit as price moves upwards. On the other hand, if it does break below here, and it breaks below these lows here at the 135.10, something like that, we are then looking, we're going to have to go into a higher time frame to understand how far that will go. So when we quickly flick over to the daily chart, we can see that if it does break below here, which it looks like it is really sort of pushing and testing these lows, then we have another low down here at the 134.85, so we've got a 35 point target for us to then be taking profit down there. So that's a simple way of analysing that. We finished on the Euro US dollar. We're going to quickly flick over to the US dollar Rand, so you guys that are trading that can have a quick look at what happened after yesterday's analysis. And looking here, we had a buy order down here. We were looking at this area of support along the bottom here, because as some people said, the challenge with the South African Rand is it can be a bit whippy, it can be a bit spiky, almost like the yen in that sense. And if you see here, a very long wick that came down here and above there, it did push below that. So what I would say is don't have very tight stops with trading this, so you might find it's therefore a bit too risky for you to trade and you might not like it. But having had a stop below this previous wick here, down at the 1063 or something like that, we would have stayed in on this trade, and price has actually moved from the 1065 all the way up to the 1075, which is an area of target up here, previous highs. So it did move there. That was a 100-point move, which is $1,000 worth of profit. The one thing to then note with trading the US dollar rand is that there's a carry trade, so it's either profit or loss that you're going to be making with holding the currency overnight because of the difference in interest rates from one currency to the other. The US dollar's interest rate is very, very low, and the South African rand's interest rate is very high. So typically so we're looking on one lot, which is a $1,000 trade, you're experiencing 10 points of carry trade, either interest charged or interest credited. So if you are buying the US dollar and selling the rand, you will be being charged $100 per lot overnight for every night you carry that trade. And if you are selling the selling the US dollar and buying the South African rand, i.e. you're shorting, which I would recommend, then you will be also making $100 per lot overnight. That's just a rough estimate. It's just a bit below $100. But so, for example, here, very nice area of resistance where price fell rapidly from it. So if you think about using supply and demand techniques on this particular currency pair, that would be awesome, because if you look here, great area of supply and supply here, i.e. resistance, and price came into it and just fell rapidly, and that was from the 10.83, pushed literally in 4 hours all the way down to the 10.75. so that's in fact below there, so 10.73, so that's 100 points. That's $1,000 profit in 1 hour based on pure supply and demand simplicity. Obviously then price came back up almost into the same area and then fell again and created a lower low. If you look here where the highs were on the top of the wicks, it virtually honoured that. Not much of a difference from there. It came up, touched, turned and fell. That was an 80-point move here, so that would have been $800 profit. You'd have also got $100 for the carry trade overnight, so you'd have been banked $900 trading this. So to be honest, US dollar, South African rand, if you're shorting it, it's a great opportunity. And as I showed before yesterday, we are in the highs of the currency, so despite all the, I suppose, the fundamental analysis, which is the rand should be weakening and continue to push up, don't always listen to the news. Trade what the actual market is showing you, and you will make some nice profit from trading this currency pair. That's it from FountainFX. Thank you very much. We will catch you on Monday. Bye bye.